The Morgan Report with David Morgan.
David Morgan with you with the weekly perspective for the week ending 10 April 2020. Well, this week I'm going to focus mostly on the metals markets rather than go through the news. I just think that that's what's called for right now. So before I start on the metals, I do want to talk about the general equity markets and talk about this huge upward move in the stock indexes that's taken place over the last few trading sessions. Basis the S&P and looking at the weekly, we got down to roughly 2,200 on the S&P 500, and now we're at about 2,800. Within about 50 or 100 points, it's probably going to hit some resistance. These type of huge rallies are to be expected, and a lot of people will be buying the dip and expecting the stock market to continue up and away, and I cannot say in good conscience that that's an impossibility. But the major trend is down until proven otherwise, and also volume is very key, and the sell volume on the down days is extremely large compared to this rally that has been modest in volume relative to the sell volume. So the buy volume is much less than the sell volume, and Granville was quite famous for inventing the on-balance volume indicator, which is actually quite a useful indicator. So my view is stocks are in a downtrend in a long-term perspective, and gold is in a major uptrend from a long-term perspective. And remember the warning that we're in a bull market in the precious metals led by gold, and the bull will try to shake you off all the way to the top, which means just like the stock market having these rallies, there'll be some pretty heavy sell-offs in the gold market scaring people out, especially people that aren't willing to hold on. So if you're going to use leverage, be wise with it in any market, but especially in the gold market. So moving on to the metals, this is yesterday's quotes because of Good Friday. And I just want to look at silver real quickly here. These are charts that are pretty easy to pull up on Kitco. And just looking at the silver chart here, you can see this is only 30 days. And you see 30 days ago, roughly, that silver was at 17. And today we're actually at 16. Again, this was yesterday's close at 15.50. But it's recovered a lot already relative to where it was 30 days ago. The 2008 bottom took 2.5 months for that bottom. This has been kind of a V bottom. It might not look at it from this perspective, but if you go to a longer term chart, you're going to see a pretty sharp down and pretty sharp rebound. So this is off the Comex itself, and this is today. Looking at gold futures here, and you can see the high and the low for the day, and then you can see the last, which is the number you would use. So gold sitting there for June gold, which is the near futures. So the spot month is less than that, but 1740 on the next contract, and silver is roughly 16 on the May contract. So you can round it up to about 16 on silver, which is roughly, we'll call it 40 cents higher than the close yesterday. So it's recovered quite a bit. We're not at 17, but we certainly have made a move here. So now I'd like to go into the holdings on the Comex from CME Group. I mean, to draw a line through it. And this is silver, and you can see the different areas that holds physical silver, Delaware Depository, HSBC, and of course the famous JP Morgan, which so many are aware of. And what's interesting here is they're not showing their eligible or total right now. What they are showing is what they own in the registered category, which is less than 5 million ounces. That's what they own in their category. Eligible, you can look it up. Just type in the Google or Bing or any search engine, what is the difference between registered category and eligible category on the Comex, and you can read up. But basically, eligible, for the most part, not in every single ounce, is just basically stored at Loomis or Malco or Manfra or the Bank of Nova Scotia or HSBC, the other ones I showed at the top. And they're using them as a vault, basically. So you have these two categories of eligible and registered. And it's very interesting, I think, that these are out today, and I don't know why. But I did look at it yesterday, and this was roughly, if I remember correctly, about 320 million total. So the difference between 82 in the registered category, the other 200-something million is in eligible, which means being stored by long-term investors. But 82 million is still there. This was at about 95, if memory serves, about 10 days ago or so. So that means that about at least 10 million ounces of physical has left that category. Some of it has moved into this category and really not left the exchange. And some has probably left the exchange and gone to some individuals, maybe ETFs, maybe hedge funds, maybe private vaults. But I want to point out that that's still a rather large number in silver, and that number has been down as low as 35 million a couple times. And I've made note of that for my subscribers. And I can't write very well. This is pretty tough for me anyway. But 35 million is about as low as I've ever seen it in the last probably 20 years. And once it gets to that level of what the banks own, or these entities own, mostly bullion banks, it usually has a bit of a squeeze in the silver market, but doesn't last for long. It hasn't so far. So I just want to point out that there seems to be a lot of talk about how much is on the Comex and how much is coming off the Comex. The only way to really see it is not the deliveries that are standing for delivery or whatever. That is like a notice to appear. On a notice to appear, many people go to court and pay the fine and never really appear before the judge. So all of the notices don't necessarily mean that it's actually taking place. It's a notice to do something. It's not the actuality. So a notice to deliver is that, a notice to deliver, but not an actual delivery. So even though you can look at those and kind of get an idea, you don't want to come to the conclusion that all of those mean that they actually were enacted upon, because the facts are they were not. And again, if you want to see how much has come off the exchange, you have to basically keep a record of this. I'm doing it in my head. I used to print them out. I don't anymore. Maybe I should do it again. I don't know. This is roughly the idea. Someone could write it and say, no, David, it was 93,400, 87,100. I don't care. The idea is correct. And again, some of that went into this eligible category. All right, next item of business. This is from a hedge fund manager, and this individual deals in physical only. Let me repeat, physical only. So please don't come back and say, well, David sided with the paper pushers or the paper paradigm. That is not the case. This is someone that deals with probably more Garda and Loomis and Brinks trucks than anyone's ever seen in their life. And he's pretty major, and that's all I'll say. But he said, please send this to all gold and silver enthusiasts about the Comex going to default on the metal and it's not obtainable. There is a lot of misinformation or confusion currently regarding the exchange transactions on the Comex versus the transaction called exchange for physical. According to CME, the exchange for physical is an off-the-exchange transaction. I think we all know that, or a private transaction. I think we all know that. When implementing the EFP transactions, one party may request physical gold from a counterparty who has the gold in the form of unallocated gold in London or gold held under the eligible Comex category. Remember, eligible means you own it, it's held there for safekeeping. However, when someone holds the EFP and wants physical, that transaction is not tied directly with the registered inventory on the Comex. Remember, registered category is what the banks or the depositories actually own themselves free and clear. This is where many gold enthusiasts, retail dealers, or writers get it wrong. Their claim is that the Comex is running out of gold or is not available if an EFP fails to perform delivery. This is misinformation. The EFP is being confused with the traditional process of buying a futures contract, receiving a warrant, and taking the metal off warrant and taking physical delivery of a Comex bar represented by metal in the registered category. The EFP is a private transaction, is initially between two parties off the exchange. If the party wanting the metal is having difficulty getting it, that is due to the counterparty, not the exchange. I'm not saying there isn't some problems here. In fact, I think there's some huge problems. There's never a disparity between like the Comex and the London exchange without something going on. I mean, price differentials present a huge arbitrage opportunity, but you're only going to arbit if you're pretty well certain that you can. In other words, to sell the future, sell the paper for an exorbitant fee and buy the physical, or do the opposite, just arbitrage the difference. But if you're not sure that you can make good on it, you're going to stay away. And if you've got a discrepancy between these two major exchanges, I'll say, plain English, something's going on. And I don't really understand the LBMA to the level that I do the CME. And I have certainly delved into it many times. In fact, I'll just make a divergence here a little further and say that I've talked to people that I was pretty well convinced knew that market very well, only to investigate further to realize that those people only knew part of the story. So anyway, back to what we're looking at. Currently, the exchange is actually seeing millions more ounces being delivered onto the exchange and not into the registered category. So they're coming in the exchange and they're being held for safekeeping, basically, going into the eligible, in other words. Long-term gold investors who want physical metal, try understanding this process of buying a futures contract to actually taking delivery. If a warrant is delivered, take the metal completely off the Comex storage system by shipping it to a private vault or secure location. If enough investors follow that process, or this process, they may understand, one, if all the gold is really there, two, how effective the delivery process can be or may be, and three, if the paper leverage and derivative stronghold exists, and four, if price discovery between paper and physical balances out. So you may not see that as pretty bullish or calling their bluff, or calling a hand in a poker game as an analogy, but that's basically what this hedge fund person is saying. If you want to find out if all the physical's there, take the delivery process, which means a warrant on the exchange. We're not talking about an exchange for physical here or private party dealings. We're talking about right off the exchange, and then you'll find out soon enough what's really going on. There is something going on. I'm not trying to belittle that. I'm just trying to say that the Comex as it stands right now does not, from all that I can determine, seem to be having an issue yet. And I add the word yet because the world is changing rapidly, and there's transportation problems. I think Loomis is sending out one truck a day to New York, and Garda probably the same, and Brink's probably the same. So the gold could be there, or maybe it is there, but the delivery mechanism is broken down substantially. So you don't want to misinterpret a delivery issue with they're out of gold issue. They're two separate things, or could be two separate things. I hope I'm being very plain here, and I'm trying to be as factual as I possibly can. Okay, I'm going past my 15 minutes. I try to keep it at that level of time or less, but this, I think, is actually a bigger situation to talk about than what's going on in the metals markets. And a shout out to Dabu7. He does a lot. And I do catch his updates a lot of the time. So this is from him a day or two ago. It's off of Yahoo Finance, as you can see. I just want to prove it where I'm getting my information. So new currency anticipated to be part of the future. This came out of Vancouver, BC. NetSense Technology, or the company. So NetSense is a company name. Jumped in the action as it learned of the plans of the U.S. Congress made to legislate for this U.S. Federal Reserve digital currency as part of two different versions of the first CV-19 stimulus bill. Ultimately, this aspect of the legislation wasn't included in the final version of the first stimulus bill, but the board and advisors of NetSense have agreed that this quote-unquote digital dollar will be included in subsequent legislation. The bill is expected to establish a digital dollar defined as a balance expressed as a dollar value consisting of a digital ledger entry that are recorded as liabilities in the accounts of any Federal Reserve Bank or an electronic unit of value redeemable by an eligible financial institution. This will create a cryptocurrency backed and guaranteed by the U.S. federal government. The bill goes on to define a digital wallet and a requirement that U.S. chartered banks offer these wallets. The establishment of these products is intended to simplify the cost and process of distributing the millions of stimulus payments contemplated by the bill, but the effects of this move will be far-reaching. While the complexity of this undertaking meant that Congress was unable to include it in the first bill, NetSense management believes the ultimate adoption is a foregone conclusion. Daniel Gorfine, founder of FinNet advisory firm Gata Horizons and former chief innovation officer at the CFTC, as well as founding director of the Digital Dollar Project, said to Forbes, quote, "It's worth exploring, testing, and piloting a true United States dollar, digital currency, and broader digital infrastructure in order to improve our future capabilities and resiliency." While the crisis underscores the importance of upgrading our financial infrastructure, broadly implementing a crypto-based digital currency will require time and thoughtful coordination between the government and private sector stakeholders. NetSense has developed software to support these initiatives and stands ready to support the effort. Part of the bill requires U.S. chartered banks to offer these digital wallets to their clients. The Forbes article goes on to quote, Camille, I'm blowing that, Cadet, founder and CEO of MTech, a modern central bank technology and services company. She recently stated a new initiative called Project New Dawn to ensure the unbanked and underbanked receive economic stimulus payments. Citing an FDIC report in 2017 that identified 63 million unbanked and underbanked in the United States, she notes, if checks are the form of payment, the stimulus is not going to reach many of them. That would be approximately 100 billion underutilized of stimulus for lower income households. We fully support the U.S. government in its creation of the contemplated digital reserve currency. The U.S. dollar is already the reserve currency of the world, so moving it to a digital format makes total sense. The U.S. might have 63 million unbanked, but planet Earth has billions of unbanked. I have to comment here. I've just been reading it, but you see where we're going here. Everybody's going to be banked. They're not going to call it banked. They'll just be on a crypto system that they can basically monitor everything. So let me continue with what the article says. It only makes sense that the dollar take digital form to enable remittance and micropayments for the unbanked globally, as well as ensure its status as the world's dominant currency. The benefits to the Treasury would accrue in many billions of dollars in immeasurable ways. Yep, everybody's going to be on the system. Take it or suffer the consequences of not taking it. Societal benefits would be created as well. A digital dollar would be difficult to use for crimes and funding terrorism, for example. This milestone is the ultimate endorsement that cryptocurrency and blockchains are here to stay, said Clayton Moore, Chief Executive Officer of NetSense. Quote, "We look forward to offering our platform to U.S. banks and then to global banks so they can meet the requirements for a digital United States dollar wallet," end quote. So I hope I made your Easter weekend, and I will be back with you next week. And remember, there is nothing more powerful than the truth, and we really need a lot more of it. So there you have it. Hopefully this was of use to you. If you're not on our basic service, which is our free email newsletter, that's available at themorganreport.com. And let me just go there real briefly. So this will take 30 seconds. So the best place to go when you're on here, if you haven't signed up, sign up. But once you've done that, you should go to the blog. And this is everything on the blog. If you're interested in paying a low premium on gold or silver, you can click this OwnX logo here and you'll learn more. If you're interested in our Twitter feed, come up here to the very top, and there's our Twitter feed is right there. It's at SilverGuru22, and that's a good one. I post almost all of that myself. If you're interested in our LinkedIn, it's that LinkedIn, and that's my LinkedIn profile right there. And you can certainly get on that if you wish. And then if you're interested in the YouTube channel, which is probably the second best place, you can hit the YouTube button I just touched. And the videos and updates that I do are here on YouTube. It doesn't look like it's populated all the way. But what I want to point out is that I do this community one, which is posts from other people often. So I posted this one that is not my work, but a lot of it I'm posting has to do with the food situation I've been harping on for a long time. So these are videos that I've watched usually all the way through, not every time, but almost every time, that I feel, if you have the time, they're worth putting to what I'll call my community, or the community that follows, what my thinking or what I'm thinking. So, half of them usually have to deal with, as I said, the food crisis, and the other half usually have to do something with the metals markets or the general economy. And a lot of these people are actually, personal friends, associates, and whatever. So people are asking, where is that? That's where it is. And then lastly, I said it'd take 30 seconds. I think I've taken a minute. So you've got YouTube, Twitter, LinkedIn, and then Facebook. Very little goes on there. I mean, we post a lot of stuff there, but I just don't interface with it. Don't expect me to reply to anything on here. I don't even know if it takes comments or likes or any of that stuff. But if you're a Facebook person, there is a Facebook presence. And there's that. So we'll just leave it at that. Wish you all a great weekend. I'll be back with you next week.